Alrighty, so I'm going to give you a little trade review of this NCD CHF short from today. So first things first, I'm going to navigate over to my free Discord chat. And if you want to join that free Discord chat, I have a link to that in the video description. 100% free, doesn't cost you a dime. You just click that link, boom, you're in. So let's navigate over there and let's break down that first, and then we'll go back over to my charts. So I said, all right, let's get it. So first we got NCD CHF, bias is bearish, market structure daily 100% bearish. That's what EMS stands for, market structure, and pulling back into a daily bearish fair value gap at the moment. 4 hour left of bullish fair value gap, which is serving as a draw on liquidity at the moment, aka that was my PT area. And the 15 and 1 hour, we had a shift in market structure this morning. Again, EMS stands for market structure. Has at this point completely rebalanced that price action from the move lower. Likely will trade lower into that 4 hour fair value gap here very soon. Again, that was my PT area. See right there, if you look at my cursor real quick, that was my PT area. I wanted to see it draw down into that, which it did. So let's go back to my charts real quick, and then we'll break it down the rest of the way on my chart. So daily market structure, as I just stated, what are we looking at here? It is bearish, right on this leg lower. So I want you to follow my cursor. I want you to follow my cursor very closely. See on this leg lower right here? On that leg lower right there, we broke that swing low level. See that? What does that represent? That represents a shift in market structure, right? So when we were selling off like that, boom, we got a shift in market structure, and then we were selling off. But then what ended up happening? Price retraced higher, right? It retraced higher back up into a what? Back up into a premium marketplace. So if we were to take our Fibonacci from that high to this low, that price range, if we were to measure that price range, you can see we traded up above 50% equilibrium by that price range. See that? And then boom, we came up, we rebalanced that price action right there, that bearish fair value gap. And then that's where price started to top out at on the daily chart, right? So we pulled up into a premium. We have these lows down here. What's resting underneath of these lows? Sell stops, sell side liquidity. That's not my PT. Obviously, that did not get hit today. But it's still what we would call a draw on liquidity. So that is what we call a draw on liquidity, right? So, and right here this morning, this is where it gets really interesting. See right here? What do we got right here? We have a daily bearish fair value gap imbalance. So on this huge explosive move to the downside right here, we have a imbalance that was created. Again, how do we find our fair value gap? I have a video on that on my YouTube. Just search fair value gaps. I have several videos on that topic, but 1, 2, 3. 3 candles, the first and the third, they don't touch. There's nothing but body in there. That tells us that this portion of price action was not efficiently delivered. Okay, it is an imbalance. And does price typically want to leave an imbalance like that? No. What does it want to do? It wants to come back up, rebalance it. So it did it temporarily, or it didn't not temporarily. It didn't completely fill in that imbalance, but it tapped up into it. That's what we want, right? So, and once we do tap up into an imbalance, typically it'll give you really nice reversal opportunities, because why? It's rebalanced that price action now. It's rebalanced that portion of price action, so now it can resume lower, okay? So that's what we saw happen here. We came up, boom, we traded up into that. Now let's go down to our intraday charts. So now we're on a 4 hour chart here. And this is that 4 hour bullish fair value gap. So remember what I just told you guys, whenever you have a fair value gap that has not been tapped into, it's going to serve as a draw on liquidity. Okay, this portion of price action right here, look at my cursor, this portion of price action right here was not efficiently delivered on that push up right there. Okay, so think about what I've told you thus far. The fact that the daily trend is bearish, the fact that we are trading up into a daily bearish fair value gap, the fact that we have a lower time frame shift in market structure, the fact that we're topping out. So what do you think price is going to want to draw into with all of this criteria falling into place, taking liquidity as well? Look at my cursor, taking liquidity as well, topping out. Where do you think price is going to want to draw down into? It's going to want to draw down into this imbalance, okay, within this price range right here. That was my PT. But yeah, so that's what we were looking at here on the 4 hour chart. That was our draw on liquidity. Now this morning, this is that lower time frame shift in market structure. And I'm also going to put in some day dividers real quick as well. Now that we're on our lower time frames, it'll, or at least I think it does. I think it cleans it up a little bit. It helps us make our key liquidity pools much more clear. So you can see what happened this morning. So what happened this morning? Well, right here was midnight. So we came up, we were consistently trending up higher right here. And what is this? I want you to answer among yourselves real quick. What is this push up right here? See how we pushed up, we pull back, we push up. We were trending up into London session. This was an uptrend during London session. So what is that? And little hint, I made a video on it recently on my YouTube channel. And I told you this is one of the key times where this occurs. This is what we call a Judas swing. That is a Judas swing. What is a Judas swing? What is its objective? Its objective is to take the liquidity. Its objective is to essentially pump fake in the opposite direction of where it really intends on going. Again, for the intention to take liquidity, for the intention to bait in breakout buyers, right? So what did price do? What liquidity pool did we take out though? Well, we took out previous day's highs, okay? And if you watch my videos on key liquidity pools, you will know that previous day's highs, previous day's lows, they are significant, and I mean significant liquidity pools, okay? So we can see we had that Judas swing for the sole intention of taking these highs right here up into, this is key, up into our daily bearish fair value gap. So let's put it together, okay? Because kind of think of it like we have a puzzle here. We took out this liquidity. That was our key liquidity pool. And what do I always tell you guys? Wait for liquidity or you will be the liquidity. Wait for liquidity or you will be the liquidity. Many of you are always confused when I say that. You are in the comments section saying, I'm not sure what this means. I'm not sure what this means. This is what I mean. Wait for liquidity to get taken. It took that liquidity. It took those buy stops out of the marketplace, okay? Existing shorts that were in this play, they're gone. They're out of the play now, right? So they took off those buy stops. It tapped into that imbalance. And did we get our smart money footprint? We sure did. Displacement. That is a displacement, clear as day. There is no mistaking it. We know displacements when we see it, right? Okay, this isn't some dilly-dally move. That is a strong, explosive move off of a larger time frame imbalance right after taking liquidity. Okay, and a lot of you guys, if you're familiar with the ICT 2022 mentorship, this is basically this entry pattern is like right out of that. So I mean, that's where I get a lot of that's basically where I've got my entry model from. Okay, that's what I like to see. That's what I like to see. I like to see it take liquidity. It comes up into that imbalance, displacement. That's your confirmation. We want to see that displacement on our lower time frame. And think about it. We wait for that lower time frame displacement, but I want you to think about what else we have talked about. This higher time frame trend is bearish. Our time frame trend is bearish. We pulled up into a premium marketplace, and now we got the displacement. I mean, if you were really ballsy, if you really wanted to hold for the fences, you could shoot for this level down here, and you would be trading with the trend. It's not my style. That's not really what I do, but you could do that. That's still a setup. Just because I'm not holding for that objective doesn't mean you can't do that. If you were to aim for that low, you're trading with the trend, you're trading with the tide. That is a likely scenario. Sure, we're coming down into some support right here at the moment, consolidating on some support, but I mean, beautiful risk reward. Beautiful risk reward if you took this retracement right here. Okay, which I'll get into that in a second, my entry. But if you took that retracement up here and you're holding for these lows down here, let's just do the math on that real quick. Let's draw our risk reward tool on it. Let's see what that would present us with. So let's say, for example, we're not going to pretend like we're perfect. Let's say you got in off that 50 institutional price level, right? So you got in right here, okay? And say you're risking that high. Okay, 18 pips. And say you're shooting for this low. You're shooting for these sell stops down here. That's a sell side liquidity pool. That is over 4-to-1 risk reward. So I mean, beautiful, beautiful risk reward. Okay, and that's how much you would chew off on that, something like that. And you're trading with the trend as well, as I've already stated. You're trading with the trend. You're trading with the tide. These are the types of plays where you can really milk off a lot of them, or you can milk off a lot of the move, right? Sometimes it'll come back on you. Sometimes it'll stop you out, find support possibly. That's part of it. But yeah, that's not my style in particular, but I'm just showing you an example because we all have different trading styles. Okay, we really don't, no one person really trades the exact same. Okay, so what about for me, for my entry? Well, as you guys know, my entry has to be within a New York kill zone. ICT kill zone is 7 to 10. I push it to 11 because I still get quite a few opportunities within that last hour. So we did have some news on this, or we didn't have news on this in particular. We did have red folder news this morning, but it wasn't correlated with this pair. We had no news during New York session for this pair specifically. So I took my chance with it, even though I really prefer not to I prefer to be out of the marketplace completely, even if it's not even correlated. Even if the pair that I'm trading isn't correlated with the red footer news that's coming out, I still prefer to be out of the marketplace. But I decided to take my chance with it because the vast majority of the times when it's not correlated, you're not going to have that big of a reaction. Sometimes it can still be influenced, but it's not something that's going to hurt you more times than not if it's not correlated. Okay, because it was unemployment this morning. It was unemployment this morning for USD, so it's like in no way it's not correlated with this. So I decided to take my shot with it. I got in right at the beginning of New York kill zone. What was my stop on this thing? So my stop on this thing was this high right here. So why was my stop right here? Because that is the high of that fair value gap, and that is also the high of this liquidity grab. That is a excellent stop out point. Because not only do we have the imbalance, but that was also where this major liquidity grab happened. So if price was to come up and break that level, that would invalidate that market structure. Okay, and that would be a good loss. Okay, it would be a good loss that I would be happy with. All right, so what about for PT? Well, PT was right here. Once it tapped up and tapped down into this fair value gap, 4-hour fair value gap imbalance that I marked for you earlier. We also have low of day right here as well, which is a key liquidity pool. So we have sell stops right here. We have sell side liquidity right here, and we also have that imbalance. So I figured, hey, sure, this thing's bearish overall. Overall trend's bearish, but I didn't really see this thing extending, like taking out like previous day's lows, for example, because we had this move up right here, this really strong move up right here, cracking on these highs. Then we have that imbalance. So I figured likely it's not going to expand, take out the entire previous day range. It just wasn't likely. I didn't see that happening. So this was a very conservative PT, and still, I mean, a great play. It's not a home run play. It was 1-to-1 or just over 1-to-1 risk reward. But hey, I'll take it. Like I always tell you guys, play the market structure. Play the chart that's in front of you, okay? And that's what I did. And yep, so it was a solid play, and we'll see what it ends up doing tomorrow. I mean, it may give us another opportunity, and it may keep giving us opportunities all the way down into this level right here, which is our draw on liquidity at the moment.